Hello and welcome to the Stock Planner channel. Today we're going to look at an ETF, Consumer Staples, XLP. Looking at the daily time frame, the chart, I expect the price to move only about 4 or 5% and stay within this range. I'm a swing trader, and what I usually do is try to pick the tops and bottoms of a market and then capture the trend in between. But with a move like that, and the way the market is going with the inflation, recession, I have a feeling that we're going to, especially since the last few days it's been down, I think we're going to go a little bit of rise and then continue down. But anyway, I think it's going to stay within this range. So I'm going to put a trade together that is range bound using an iron condor with a profit of $50 over the next 45 to 90 days. Stick with me. I think you're going to like what I have. Before we get started, the Stock Planner channel is an education channel. We are swing traders, as I said, picking those tops and bottoms. And we're sharing our ideas, learning how to do trading, swing trading, and learning how to win and take profit. You have to do your own due diligence because trading is risky and you're responsible. Well, let's get started. Swing trading with the Stock Planner. It's Thursday afternoon. Basically, the market hasn't really done anything but go down. The NASDAQ had a big move and some relatively stable moves on the S&P 500. The map looks to be mixed. Looking at the map, going to the exchange traded funds, I want to make a small trade today, and I want to be in the consumer staples. And my favorite one here is XLP. Looking at FinBiz groups, coming down to the 1 week performance, consumer defensive, consumer staples, did the least worst for the week. There it is, the second least worst for the month. And here it is. There is some dark green for the day. Energy, healthcare, computer, consumer defensive. And I don't think financials are going to do that bad during our recession and during inflation. But today I want to look at consumer defensive, staples. Going to TradingView, which is a free software package out there, charting package, and looking at XLP, consumer defensive, consumer staples, in the daily time frame. Each bar is a day's worth of data. I look at the chart, and these lines here are the zigzag, and right now the zigzag here doesn't know what it's doing. The zigzag is not an indicator at all. You can see it's perfect. It picks the tops and bottoms. That's what we want to do as a swing trader, picks these tops and bottoms. But it does it by looking to the future and repainting itself, so it's always going to be perfect because it looks to the future. It's like predicting the Monday night football game on a Wednesday. And then this is the MACD, the stochastic, and the RSI. And right now, the RSI seems to be pointing downward, and so is the MACD. There's a crossover here. It says it may go up, and also the stochastic says it may go up. And the RSI looks like it might want to come around and go up. And what I think is going to happen is we've got a couple down days with the Fed announcement. Things don't look too good, but I think we're going to have a little rally and then continue down. That's what I think. Looking at this, and what you see is there may be some kind of level of support here, and there seems to be something here. And if you think we have some more downside, I just made this, I guessed at this. You can use Fibonacci and stuff to predict it, but I just kind of said it might go down to about 65, 66, 67, somewhere in there. And you see, it spent a lot of time in this area. And of course, you can go back further. It spent a lot of time in this general area. So if we could make a trade, that would be somewhere in between this 75, 67, that it ends up in about 45 days between those two numbers and can pay you a reasonable amount. You have a lot of ways to win. Well, let's take a look at that. See if we can come up with some kind of trade that will stay between these two numbers. And I just want to point one more thing out. You see, this is trading at 70.62 at this time. And we go to a tool called Option AI, 70.68. Moved a little. But we're going to see about a 3.6 in 1 month and a 6% move in 3 months. So let's just go in the middle there for 45 days. Let's call it 4%, 4 or 5%. That's not a lot. It's not a big move. So a 4% move, a high strike would be 74. 74. We're rounding it up. We're just doing some ballpark figuring. Yeah, that makes sense. And 68 right here. So the option tool, the option AI tool says on the low end, it's going to move about 4% to 5%. 4 to 5%. So and we know it spends a lot of time in this area. Let's see if we can get a deal that's going to stick in that area there. An iron condor is what you're saying is it's going, the stock price is going to stay in between some 2 points. In this case, putting this one together for the 28th of October, which is about 37 days. That's close enough to 45 days. And it could have went out here and here. I chose to do 28, October 28, expiration. And we're going to sell a put and a call and buy a put and a call for protection. So Iron Condor, plenty of information out on the web on how to do these. It's fairly simple and it's fairly simple to manage. We're getting $46 in our pocket and our max loss is about $100. But there's a lot of room for profit for a little bit of money. If you have a margin account, you have to put $150 on hold. That doesn't mean you're using it. It just means it's there in case you need it. This trade must be staying between 67 and 73. We'll take a look at that on the chart in just a minute. But I want to show you one other picture of this. As long as this price stays between 67.04 and 73, you have a winner in your hands. But if it goes beyond that, you have a loser. And you can see these are uneven on both of these sides. You can make them even like that. Then your max loss is 27, but your net credit is only 23. So I skewed it a little bit to the high side. And the reason I did that is I don't think this is going up. I don't think it's going up. Let me just show you. I don't think it's based on the environment we're in with inflation, recession, Ukraine war, supply problems, China threatening Taiwan. I don't think this thing is going up. I think we have a higher probability of going down. 73, 50, and 67. Remember those two numbers? Let's draw them in. 73, 50, and 67, 68. Do you think it's going to end up in this area? Are you willing to risk about $100 to see this trade? I think it's worth it in this relatively non-direction day, even though it is going down. The stock market is going down. Let me know what you think of this trade. Making $50 in less than 45 days on a $100 risk. So that's all I have for you. Remember to do your own due diligence. Learn various different new strategies, especially in the environment we're in. Now's the time to learn and win. We'll catch you on the flip. Happy trading. And remember, check my Discord out, my free Discord out, for other trade ideas like this.